All right, guys, welcome back. We are in week 3 of online learning. Last week, we talked a ton about foreign policy, and we're going to shift now and we're going to talk about the federal bureaucracy. I've typed it 50 times, and I still don't know how to spell it without the spell check, but that's okay. So, we're going to talk about the federal bureaucracy. Specifically, today we're going to focus on the Federal Reserve because arguably that's the part of the federal power structure that affects us the most, arguably. So we're going to look into that, the actual history of the Fed and what it does, and a few things that I think are worth noting. We're not going to go super deep into the financial X's and O's because you guys will have a chance to learn more about that when you take economics. But it's a massive part of the government, and chairman of the Fed and the president, and really the members of Congress, they all are heavily involved in the Federal Reserve System. So it's worth exploring for us. So we're going to start out with a PowerPoint, and then after that, we're going to switch to the website for the Federal Reserve in Atlanta, because there are several regional reserves, and Atlanta is one of them. So, a Federal Reserve note. We're not going to worry about that. Well, sure we are. We're not going to do it together, but I'll show you. All these little things on a dollar bill, the bill gets from the Fed, and they all have a special meaning. So, what is the meaning of all that? Well, note type up top, Federal Reserve note. The plate position over here, district number. So I believe Georgia is number 6, but I could be wrong. District letter. I think we're F. We'll figure that out by the end of the day. And serial number, facility mark, and series. This says facility mark is A, so we'll figure it out. I'll figure out what district we are in Georgia and what our facility mark is. Moving on. Oh, here we go. I was right. 6F. So 12 different locations. Now, the Federal Reserve works with the works alongside, sort of parallel to the Treasury Department, or they work along with the Treasury Department. So some things are reserved for the Fed, the Federal Reserve, no pun intended, and other things for the Treasury Department. Federal Reserve determines type of note, district seal, district letter, district number, serial number, and then on the dollar, the Treasury Department is in control of the department seal, et cetera, et cetera. So there you go. What is the main difference between the Federal Reserve and the Treasury Department when it comes to currency? Treasury Department prints it, and the Fed issues it into circulation. So the Fed basically controls how many actual paper bills are out on the street. So it's the central bank of the United States. That's an easy way to remember it. You hear Federal Reserve, just think, okay, that's the central bank of the U.S. But to limit its powers, the creators, the founding fathers, they purposely gave it both centralized features and decentralized features. So, number one, there's a chairman, of course, but it's ruled by a board of governors. To insulate them from politics, members on the board of governors serve for one 14-year term. This is an older PowerPoint there, but that's Janet Yellen, former chairwoman of the Fed. And when it says to insulate them from politics, what that means basically, it's similar to how Supreme Court justices are lifetime appointments. They want these people to hopefully rule based off of sound logic and doing what's in the best interest of the American people. And if they're worrying about getting reelected, then they're likely to be more partisan in their decisions. Remember, the guy now, his name is Jerome Powell. So the current chairman of the Fed is not Ms. Yellen. It's a guy named Jerome Powell. Right. So 12 regions, each with its own district bank. New England, Boston, and New York are numbers 1 and 2, followed by Philadelphia, Cleveland, Richmond, Atlanta, Chicago, St. Louis, Minneapolis. That's a large span. San Francisco, Kansas City, and Dallas. The Fed makes decisions regarding which type of monetary policy to pursue. When we say pursue, to go after, to try to get past. And the FOMC, they have 12 voting members, the Board of Governors, the New York District Bank presidents, and 4 other rotating district bank presidents. It wasn't created as a part of our Constitution. In fact, it wasn't made until the 20th century, until 1913. And before that, you remember, because we've talked about it over and over again when we've been talking about the origins of American democracy, there was such an aversion to strong governments that something like this would have been a very scary concept to a lot of people, to a lot of these anti-federalists. So it's not until 1913 that it's created. And even after that, there has still been some jockeying between people with opposing viewpoints on it. So, First Bank of the United States. Remember, when the U.S. was founded, it was in tremendous debt. It had just fought a war against a superpower and really had exhausted just about all of its resources. Granted, in defeating the Brits, they established a new nation, but before that nation started really reaping the benefits of independence, they had to repay all their debts. So Alexander Hamilton was a guy who was a real champion of the first bank of the United States, the first national bank. And he creates it in 1791. Remember, this is not, at this point, this isn't the Fed. This is just the national bank. When Thomas Jefferson comes to power, remember, these guys, Hamilton was a staunch Federalist. Jefferson was a guy who liked the idea of an agrarian republic. And as a result of that, or in part due to that, Jefferson decides not to renew its charter. But we get in another war, the War of 1812. And they realize, James Madison does, that They really need this national bank right now, as they're yet again in a war. So they set up the second bank of the United States, which functioned essentially the same way as the first bank. Andrew Jackson, who is a big states' rights guy, he becomes president and he takes all the money out of the second bank of the U.S. and puts it into state banks, yet again allowing it to expire. So now you had all these very loosely regulated state banks, and yet again there was chaos in our financial sector, in our economy. That's why they called it the free banking era. Just these state-run and regulated banks, each of them, each state, of course, with their own financial regulations. There was no uniform currency. In other words, um, not like right now we have American dollar bills, and most people pay with some form of plastic these days or with their cell phone. But that is the sole currency of the United States. Not the case during the free banking era. Jones Bank in Arkansas might be issuing different dollar bills altogether than uh, Rebecca Bank in Alabama. So again, this lack of stability was very bad for the environment, or excuse me, the economy. That gives way to the national banking era. And at this point, they're going to establish nationally chartered banks and issuing currency that's backed up by the Treasury, so that's guaranteed to be there. These banks would that's a way of reassuring uh, their patrons that, hey, your money's safe with us. It's backed up by the Treasury. 1907, J.P. Morgan, who was a early titan of banking, he rose to power during the Rockefeller, Carnegie, Vanderbilt era. He actually wound up having to loan banks millions of dollars. Um, and that lack of ability by the federal government to loan those banks the money they needed was something that highlighted the need for a Fed. Along comes the Great Depression, and we're going to come back to this slide. Actually, no, let's keep cruising. So these old ideas, like laissez-faire, becomes popular. Laissez-faire, which I don't speak French, but basically it just means leave it alone. It will fix itself. You don't need to be overly hands-on. Um, so in terms of prices, if we're looking at B, um, the thought was that inflation was an issue, but that deflation was not. They use the gold standard, which means our money supply is tied to the amount of gold. There's a gold market, a precious metals market, that'll say, okay, 1 kilogram of gold is worth X amount of dollars, and the value of the dollar is tied to that. In with a new mindset on it. We get the National Banking Act, which created deposit insurance with the FDIC. I don't know if you've listened to bank commercials at the end when they do the super fast, uh, the super fast, like member FDIC. So they want you to know they're insured. I'm going to need this to go ahead and go full page on me. There we go. And in the wake of that, they passed the Glass-Steagall Act. Glass-Steagall Act was an act that distinguished between commercial banks and investment banks. So the idea again to make investment banks more stable. So right now we're going to pause there. I don't want to get too historical. So let's look at our hometown Federal Reserve, the Federal Reserve Bank of Atlanta. I used to walk by this every day on my way to school, in case you were curious. So we're going to read this. It's not very long. And then on the Fed explained, there are two like 3-minute videos that I'd like to watch. So hopefully it'll let us do that. They're videos actually made by the Federal Reserve. So the Federal Reserve Bank of Atlanta is part of the Central, Bank of the United States. The Federal Reserve System, the Fed, as it is often called, consists of 12 reserve banks located around the country and the Board of Governors in Washington, D.C. The Atlanta Fed Territory covers the 6th Federal District. Which includes Alabama, Florida, and Georgia, and portions of Louisiana, Mississippi, and Tennessee. The Atlanta Fed has branch offices in Birmingham, Jacksonville, Miami, Nashville, and New Orleans. At the Federal Reserve Bank of Atlanta, we embrace diversity and inclusion as essential to who we are. The bank's values, integrity, excellence, and respect are a clear statement supporting the notion that every employee is an important part of the Atlanta Fed's story and success. We advocate a simple truth. Only by drawing on the talent, expertise, and perspectives of our entire staff and external stakeholders will our bank achieve its greatest potential. All right, they're good for you. Let's focus on this part, the part that matters to us. The Atlanta Fed and the 11 other reserve banks and Board of Governors play an important role in all 5 of the Fed's functions: conducting monetary policy, promoting the stability of the financial system, promoting the safety and soundness of individual financial systems, fostering payment and settlement system safety and efficiency, promoting consumer protection and community development. In its monetary policy role, the Federal Reserve seeks to keep prices stable and economic growth at its maximum sustainable rate. The Atlanta Fed president participates in deciding the direction of interest rates, convening with the other Federal Reserve presidents and the 7 board governors every 6 weeks at the Federal Open Market Committee meeting. Along with other reserve banks and the Board of Governors, the Atlanta Fed monitors financial risks to help support a stable financial system. In a stable system, financial institutions and financial markets can provide households, communities, and businesses with resources they need to invest, grow, and participate in a well-functioning economy. The Atlanta Fed's supervision, regulation, and credit staff seek to promote the safety and soundness of the individual financial institutions in the 6th District, encourage them to responsibly meet the financial needs of their communities, and ensure compliance with applicable laws and regulations. The Atlanta Fed and some of its branches provide cash to depository institutions in the region. In addition, as home of the Federal Reserve's Retail Payments Office, the Atlanta Fed processes transactions made through the Fed's automated clearinghouse service, an electronic network that facilitates credit and debit payments between banks. The office also clears millions of checks every day. The Atlanta Fed supports the Federal Reserve System in promoting consumer protection and community development through our consumer-focused supervision and examination, research and analysis, and emerging consumer issues and trends, community economic development activities, and the administration of consumer laws and regulations. This function also works to activate underutilized financial, human, and social capital to foster the conditions that facilitate inclusive economic growth. Inclusivity seems to be a major theme, which that's a good thing. The chairman of the Atlanta Fed This guy named Thomas Fanning. This fella. He's somewhat new. I listened to an interview that he did, and he's new to the job, but he sounded optimistic. Now, mind you, most people say that. Well, I think it's almost universally accepted that we're entering a significant economic downturn. So the role of somebody like the chairman of the regional Fed is huge, and it's very stressful. Um, but yeah, he's a New York guy. Um, Seems like a very sharp guy. Now the Fed has its critics. There's no doubt about that. They have a lot of critics. In fact, some people think we should get rid of it altogether. And that's where the president and his role in dealing with that wing of the federal bureaucracy, that's where that really starts to matter, and that debate becomes important. About the Fed explained. I think there's about 3.5 minutes.
Economies don't always perform the way we like. Getting them back into winning form takes careful strategy. That's why we need a monetary policy. Our nation's monetary policy is an economic strategy that influences interest rates and the supply of money and credit. So, why does this matter to you? A good monetary policy promotes price stability and high employment. That means people can find jobs and make better informed choices about what to spend, and businesses can make better informed decisions too. That helps keep the economy moving in the right direction. It's the Fed's job to come up with that monetary policy. In 1913, Congress created the Federal Reserve to provide a more stable and secure monetary and financial system. The Fed's role in the economy has evolved over time. Sometimes what has ailed the economy is a sudden need for liquidity. During a financial panic, the public's demand for cash can catch banks by surprise. And since most of the money that banks hold is tied up in loans, they may find getting their hands on cash difficult. Acting as the lender of last resort, the Federal Reserve can lend money against a bank's good assets and prevent the financial panic from disrupting the economy. This tool is called the discount window. In 1977, Congress amended the Federal Reserve Act, stating the Fed's monetary policy objectives were to maximize employment and maintain price stability. That's what is now called the dual mandate. For more than 100 years, the Fed has used its policies to help our economy run smoothly. To create a monetary policy that will work best for the entire nation, the Fed needs a lot of grassroots information. Where does it come from? From farmers, and real estate agents, and car dealers, and factory owners. All over America, different kinds of Main Street people share what's going on in their own businesses with their region's Federal Reserve Bank. The reserve banks gather this information and combine it with economic statistics like inflation measures and employment data. Then, from all over the country, that information heads to Washington, D.C. 8 times a year, the 12 Reserve Bank presidents, along with the Fed's Board of Governors, meet in Washington and report on their regional economies and present their economic projections. The Federal Open Market Committee, or FOMC, combines all these detailed views of what's going on nationwide and studies the whole picture. At the end of each FOMC meeting, the voting members, 5 of 12 Reserve Bank presidents, and the 7 Fed governors, cast a vote on setting monetary policy. Decisions on monetary policy are immediately communicated to the public. To build a healthy economy, the FOMC needs good tools. If the Fed needs to adjust interest rates and affect inflation, it uses open market operations, which is the buying or selling of government securities. Buying or selling these securities expands or contracts the supply of money in the banking system. Raising or lowering the federal funds rate, which is the interest rate banks pay each other for borrowing money that is maintained at a reserve bank, also helps affect the inflation rate. And finally, all banks are required to have reserve requirements, nest eggs set aside and kept at the ready so the economy stays fluid. To meet the challenges posed by our last recession, the Federal Reserve developed new tools and communications for the extraordinary circumstances following the financial crisis. One of these is forward guidance, which is the Fed's description of its likely future policymaking. This helps shape the market's expectations of interest rates. Another tool is quantitative easing, which is a way to inject liquidity into the economy and help keep long-term interest rates low. No matter what tools or policies the Fed is using, we'll always let you know what's going on. That's why the Fed chair holds press conferences after FOMC meetings once each quarter. Also, other Fed officials deliver public speeches and testify before Congress about the Fed's actions. Why is all this important? Ultimately, all these factors work together to create an economic strategy that works for each region, making our national economy run smoothly across the board. To find out more about this and other topics, visit us.
All right. We're running out of time. We've got about 3 minutes left. So instead of watching this next one, I'm going to post it on your classwork page under additional material. And I want you to watch it. So I'm going to let you guys do this on your own, but you're going to have some questions to answer from today's lesson, and some of them might come from this. So I recommend that that you check it out. So anyway, I know today talking about money, it's not the most exciting thing in the world. By the way, well, no, we'll talk about that later. It's not the most exciting thing in the world, but it's important, and financial policy is a major part of U.S. democracy. So with that, I think we will call it a day. Good job so far, guys. Keep staying on top of your schoolwork, and I will talk to you tomorrow. I hope to see some of you guys in our Zoom sessions, but as long as you're doing well and getting your homework in and doing your assignments, I have no complaints. So keep up the good work, guys. Bye.